Oh yeah, the bear quiet market regime. In this video, I'm going to break down something that's crucial for every trader to understand: market regimes, and specifically the bear quiet market regime, which we're currently in right now. But first, I'd love it if you hit that like button. It costs you nothing, but it means the world to me. While you're at it, subscribe to the channel. We're pushing out multiple videos every week covering what's happening in the markets and key concepts like the bear quiet market regime and all the other market regimes we've been covering. So get into it. Let's go. If you haven't noticed, we are in a pretty rocky and kind of angry market. The S&P 500 down from around 6,200 down to about 5,600. So a good 600, at least 10% down from its highs. And what had been working previously for the last, 6 months or so, pretty much died. And if you look back even further, we go back to 2022 or so, it has just been a straight up, that's been rocky along the way for sure, but nothing like what we've started to get here. This is pretty new. This is something different. And it's also very headline oriented. And maybe your strategy has stopped working. Maybe what was working for you for the past year or two isn't working at all anymore. It might have worked for a day or two in here, but it's over. So if you've been frustrated by what used to work and is not working anymore, or you want to see what should be working, what to expect, how to deal with this new market, that's what we're going to cover here. So first, let's establish how we categorize market regimes. I use a model that breaks markets down into direction and volatility. So we have, the bullish, the bearish, and the neutral direction, and then we have high and low volatility. And that gives us 5 different market regimes: bull volatile, bull quiet, neutral, bear quiet, bear volatile. I did a video on that. I'll put the link down below if you want to go get the whole overview of what we use market regimes for, how they're built. And then I'm working on all the individual market regimes, like this one, the bear quiet market regime. So each one of those market regimes has different characteristics in terms of price action and the trader's psychology. Now, they're not unique specifically for each market regime. Some of them carry over to other market regimes. So be careful in being too dogmatic, being too focused and too exact. And so I use the SQN indicator to help me identify the market regimes. It's a free indicator I made in Tradingview. I got the link down below. You go click it, add it to your chart. It's free, and you can follow along in these videos and see how I use it. On the chart, you can see at the bottom histogram, that's the SQN indicator. And if we're looking at it right now, we are in the bear quiet. It's that red, okay? Red indicates bear quiet. This also signals something bearish going on, the straight down chart there. So this is the S&P 500. As of right now, we've kind of popped in and out of the bear quiet market regime for the last month. And it's a bit of a transition because we went from, quite a good amount of bullish market regime for the year, and we're flipping down into this. This transition is volatile. We covered last week the neutral market regime, where you have these strong indications that the market has reversed, followed by strong indications that the market has reversed the other way. I'll put a link to the video for the neutral market regime down below too, so you can go watch that. But this transition from the bullish area to the bearish area, there's a big battle in the middle. The bearish market regime doesn't really have a whole lot of, you don't have a lot of experience, so not a lot of time when the bearish market regime over the years. It's just the S&P keeps going up, right? So that means passive investments are constantly bringing a bid to the market. There's a whole infrastructure coming into the market that is long only, that is buying. And so you're always fighting that. And as that transition, if it does happen, it becomes pretty aggressive when we get into an actual bear market, at least how I categorize a bear market. Traditionally, bear markets are considered a 20% drop from the all-time highs. Okay, so that's how everybody in markets says, it's a bear market. We all agree. But the issue here is that's too precise. And I'll show you what I mean here. Generally, this whole idea we're talking about, the market regimes, is not about precision. It's about the environment that is possibly available, that we're in, so that you can say, it's the middle of winter. I'm going to be focused on middle of winter type thing. It's summer. I'm going to be focused on hot stuff, right? That's what market regimes are. They are generally a way to categorize and a way to expect what should possibly happen. So this is the S&P 500 back in 2018. In 2018, the S&P 500 sold off, cratered all the way down from almost 3,000 down to 2,350 or so on Christmas Day. it was chaos on Christmas Day. Now, officially, the S&P 500 was down 19.99%. So not a full-on actual bear market. 1/100th of a tick away from being a bear market. But in the period from the month of December, basically, from the beginning of December to Christmas morning, it went down 16%. 16% in 1 month, almost straight down. So not officially a bear market, but I can tell you going about 20% in a few months feels like a bear market. When I traded it, it felt like a bear market. It seemed like a bear market, but it didn't officially become an actual bear market. The Dow was down about 19.5%. The only thing that was actually below 20% in an official bear market was the NASDAQ. So what we can see is within the first, by the middle of the month, the bear quiet market regime had printed. So in the way I categorize markets, we are in a bear market. I don't need the official negative 20% to give me the, hey, we're in a bear market. It was based on price action, speed of the move, and direction. It was quantitatively a bear market, not this magic negative 20%. Because again, negative 19.9% is not a bear market, but negative 20% is. The precision is what gets people in trouble. So what do we see in bear quiet market regime? Remember, we have the bear quiet and the bear volatile. We're not even talking about bear volatile yet. The bear quiet regime, we see quick declining prices. The rising prices are kind of small, not that many, but you get a lot of big bear bars. Obviously, a lot more bear closes than bull closes, meaning negative down days. They're large percentage, like negative 1.5%, negative 2% down days, unlike the bull days, which are much smaller. This is a 3.25% day. Prior to that, it was like a 1%. Prior to that, it was 8.2%. So triple the size down than it is up. Also, it's economic data, positive economic data, like a good CPI print or jobs data or something like that, hits the market and then gets sold off, or it's not strong enough to really change our position. And even though you might get a sustained 1, 2, 3 day rally, eventually something comes in, bad news comes in, or not nearly as good a news as we'd hoped for. And that really causes a big reversal. And like you can see it here. This is an example of we had some good news come into the market and we thought, oh, great, the market's coming back. Again, we were talking about that neutral market regime, very convincing that it's bullish. And then it just cratered. Again, we had 16% in a couple of weeks. And it happens usually pretty quickly. So you have a lot of the people who've been trading for a couple of years maybe or something like that, who really haven't experienced a real bear market or a real bear quiet market regime. They don't know how to change their strategies, or they're constantly trying to buy the dip. Everybody tells you to buy the dip. So what's important to understand is when the market regime changes, you need to change your trading strategy to work with the current market regime. So you can see that something has changed in the market. This is a different look than we've seen. This sideways, yes, we had a big dip during the summer, but look how it just kept powering higher and higher and higher into that dip. This, on the other hand, is that change in character that I talk about. In December, it peaked and we started putting in lower highs, lower lows, had a second attempt, and now it goes. This is indicative of a bear quiet market regime, and we are in the bear quiet market regime. So what can we expect to work? What worked over here, buying the dips here, buying the dips here, so far hasn't really been working right here. Buying this dip kind of worked, but what happened is with these lower highs, it's just gone really, one directional. And what's different over here too? We're in the neutral market regime down to a bear quiet market regime, which we haven't had since we got down to the lows in October of 2023. So that's a different look, right? This is lower highs and lower lows. This was immediate back into higher highs. So what worked since November of 2023 to December 2024 is not working anymore. So what works in a bear quiet market regime? For me, mean reversion is one of the best strategies to trade in a bear quiet market regime. Risk is so much higher. That is the ability to get stopped out or the ability to catch big moves in your favor requires less risk, less size. So if you're putting on a couple of contracts normally, maybe 5, 10 contracts, you might get the same sort of returns off of 1 or 2 contracts, especially in a high volatility market. So when we're doing mean reversion, oftentimes you'll get that big news event that seems really great and everybody's excited on the open of the market. And if you can get like a curvy short, a mean reversion short, you can catch a big runner that could potentially last multiple days. The bear quiet market regime is a news-driven market. So unlike other markets, you need to be aware of news events. You may not need to care what the news events are, but just that they are going to be hitting the tape. You want to know when scheduled news events is going to happen. You want to know when potentially other news events that could be happening. Is there a time of day that news has been hitting? Are we expecting something from the White House or from Europe or from other places in the world? Know when those times are and be prepared for them. So I use the curvy trading system. I'll put a link down to that down below. You can take a look at it, see if you're interested. It's designed to capitalize on these range-bound markets. So when news is not happening, these markets tend to get a lot quieter than normal. And that's excellent trading for mean reversion strategies as well. In the bear quiet market regime, if you get a good mean reversion, that like a bounce to short, oftentimes you can catch a substantially larger trend move lower from that gap up type short moves. And the other thing that's super frustrating about this market regime is when a market reverses, it reverses so much stronger than it would in, say, a bull quiet type market. So you can't just invert what works in bull quiet. It has to be its own unique thing. And so because it's a big headline market, the governments are heavily involved. Governments are not too excited to step in and slow down a nice, strong bull market, but they're very quick to step in and stop a bear market. I tend to lighten my trading size. I tend to lighten the amount of trades I do. And most importantly, I kind of move away from indices when these market regimes when we're in the bear quiet market regimes. I like to move over to other markets, other sectors that might be performing. Now, everybody's focused on NASDAQ, tech stocks, S&P 500, the Mag 7 and all that. At MacroOps, we're trading commodities. We're trading gold. We're trading energy, ags, even currencies. Some of them are putting in some really good trends. Some are doing mean reversions. We've got strategies for both. And right now, I'm going to show you a few examples of trades we've been in this year that have been quite successful. While the S&P's down 10%, we're up over 10% in that period of time with not a 10% drawdown. So here's one trade we've been in quite a bit this year. This is gold, and it's these using my swing beast strategy. I'll put a link to that one too. You can clearly see gold is clearly in a bull quiet market regime, which is nice, quiet, rising days. You have way more strength on the upside. It may not be like huge multiple percent days, but you're getting more days up, and a little bit of pullback up. So we've been in a couple times this year. We're getting close to a bull volatile, which is another market regime I'll cover. But right now, the trend stays. Next, I'm trading energy. I'm trading RBOB. Okay, this is gasoline futures. And in the neutral market regime over here, okay, come down. This is the curvy setup, got long, and it's already up 2R right now. Just a nice, gentle rising market, but notice the price action. This is price action of a bull quiet market regime. So this would tell me to look for more of a sustained trend, okay? So what I did, I got long over here. Now we're up to 2R. I moved my trail stop up to lock in 1R, and I raised my profit target up to over 5R. So there's a really big profit potential in this one if the trend persists. So far, this is a change in character. And so I want to be playing these easy markets instead of fighting the S&P or NASDAQ where it's quite a battle. This is an easy, simple market to trade. So if we come back to indices, we can see that Russell, bear quiet, S&P, bear quiet, Dow, bear quiet, NASDAQ, bear quiet. These top 4 over here, they're all in the bear quiet market regime. We have not hit an official 20% down move on the markets, which would imply to a lot of people that there's still a lot of room for the markets to go and still not be too violent. Rates are dropping in this environment, so you can see that that's kind of been strong there. That's what we've been focused on. So if I do get involved, and I'm waiting for my shot in equities, in the indices, I would either be looking for a nice, gentle mean reversion setup. We got long over here and we sold over here on curvy long on NASDAQ. This is S&P. Well, it doesn't matter. It's the same move. We got long over here, took profits over here just when the market dipped. We may look to do the same again if the setup is there. If not, I'm actually considering a short and it's using Swing Beast on the short side to catch a bit of the down move. Of course, it'll be a much smaller position than I would on the upside, but that's it. So when will the bear quiet market regime end? Every market regime eventually ends. Transitions often come with several telltale signs. An acceleration in the slope of moving averages. So, they could start curving up or just flip over straight down. Maybe huge spikes down, like big. So if this is a 2.42% down day, this one was a 3% down day. It looks like, maybe like a 5% down day on big volume that reverses. That sort of thing. Ideally, what we're looking for is a change in character. So right now we've got lower lows on the S&P 500. If we got a higher high, that would be a change in character. But if we got a lower high, then we would expect a lower low. If we didn't get the lower low and we got a higher low, then that would be change in character. Another change in character is bad news isn't getting the market to react. It's just absorbing the bad news as if it's just normal. Like some really bad news comes out and there you go. You have a small down day or a small reaction and then nothing happens. That's a change in character. Or you have good news holds, doesn't get sold. This would be good news, but it did not hold. We took out the lows. Okay. What we would want to see is sustained rally with a higher low and a higher high. Good news that doesn't get sold off and gets absorbed higher. That'll start indicating change in character. And finally, if we actually get a bear volatile market regime, which we haven't even covered because it's so rare, it's only happened a couple of times in the last 20 years. Think of like the March 2020 bottom or the global financial crisis in 2007, 2009, where the government stepped in with a howitzer of cash to save the entire world. That would signal a bear volatile type situation, would signal a market bottom. All right, to summarize what we've covered today, we are currently in the bear quiet market regime, and this is characterized by grinding lower prices with declining volatility. Right now, volatility is probably going to be kicking up. Mean reversion trading strategies tend to work best in this environment. Position sizing should be adjusted to the high volatility or low volatility environment. Higher volatility means lower sizing, lower volatility means higher sizing. Table selection matters. You don't have to trade this bear quiet market regime. You don't have to trade a bull market. You can trade whatever your strategy works with. Go find those things to trade it with. And patience is crucial. Bear markets, there's a lot of opportunities, just like in every market. The market will be here. Stay in the game. All right, so here's your action items for the bear quiet market regime. Review your current trading strategy and assess if it is appropriate for the bear market regime. Go see how it traded in previous bear market regimes. That's what the SQN is useful for. You can identify similar market times to see how things work. If you don't have a mean reversion strategy, grab the Curvy mean reversion trading system. Works for me, worked for hundreds of traders. Be focused on position sizing, proper position sizing, not just a random number that you choose or dollar amount. Figure out what percent risk, how to stay in the game based on position sizing. Focus on the markets that work well with your strategy. Go find those. You don't have to trade one market just because you consider yourself a S&P trader. All right, so if you found this valuable and informative, again, give me a like, subscribe to the channel, go to macro-ops.com. We write multiple newsletters throughout the week. We cover this sort of stuff in detail, but also cover like what's going on in the markets in real time. And drop a comment or a question down below, share your experiences, ask questions about the bear quiet regime. Until next time, stay disciplined and trade with the market you have, not the one you wish you had. Love you all. Bye.